Hello and welcome to the macro bit for the end of the week that began on September the 11th, 2017. Big week in Australian data, business confidence, consumer confidence, employment. And we also had something that we don't normally get to see very often, which is the household expenditure survey as well. Really want to just quickly touch that. It was very interesting to see that over the last sort of 3 decades, there hasn't been a huge change with regards to expenditure in terms of basics versus discretionary. It has increased, however. Now we spend around 59% of our current weekly wage on basics, and that's things like housing, education, also energy and fuel. What is interesting though is that there has been a change in the actual level of debt that we hold. It is clearly ramped up, and that's not surprising, but we are now paying 20% of our weekly wage to housing, which used to be only 13%, and now also we've seen education jump up quite strongly, up 44% over that same period of time, along with health. Interesting because, again, it just bites into that idea that discretionary spend is on the way down. And that brings me to the next point, is that having a look at business conditions and also consumer confidence numbers, they clearly reiterate that as well. So the only sector of the business numbers that came out this week that's pessimistic is retail. The rest of it's very, very optimistic. And if you have a look at business conditions, they hit a record level again, up 1 point to 15. That's really what that suggests is a very, very accommodative environment to actually be doing business. However, confidence fell 7 points to still an optimistic point of view. But in saying that, that's a really big shift. Now, NAB's putting that down to things like North Korea, the fact that we've got a bit of an energy consolidation and sort of government intervention. So maybe it's a one-off. But what I would clearly point out is they had, for the first time ever, a chart that actually showed the factors that are influencing positively or negatively their conditions. And as you can see from the chart on side, the one I really want to highlight is the third one. Wage costs are clearly a major headwind for business, and that's what they alluded to. Obviously, outlook for their business, margin pressure, and costs, particularly wages, are why they're finding confidence a little bit different. That brings me to the other side of this, which is, again, for the 10th consecutive month, we remain pessimistic on a consumer confidence side, and that's a disappointing thing. It was a better read. We jumped up 2.5%, but for the last 10 months, the same reasons are why we're actually currently pessimistic. Household finances, possible increases in in interest rates. You've also got increasing costs, issues around energy and fuel, housing costs and affordability. All of that hasn't changed, and it's the same thing for the last 10 months. And although what I would point out, they are suggesting that employment is expected to rise and we're more confident around it, we're not confident that our wages will go with it. And that is also what came out in the numbers that we saw from the wages. And that brings me to the next part. On the sort of Australian data that has been, employment is very, very strong. No matter which way you cut it, headline figure, as I always say, look through it, and I deliberately do that for this one, 54,000 jobs added just doesn't seem plausible. But when you look at it at a trend basis, 27,100, it is. It's a very consistent trend at the moment in employment. It means we're on track to be adding 307,000 jobs for 2017, and that would be the strongest year since 2005. And we may even beat it if we keep the current trend. What is also interesting inside that number, despite that really positive figure, is that the the numbers of hours worked is declining and declining steadily. And that gets back to wages, that if you're working less, although you might be in full-time employment, your wages aren't going to grow. And that gets back to the consumer confidence that, yes, they believe that employment is getting better, but we don't believe our wages. So there's a whole heap there, and I do understand that about this week, but in the main, it's very mismatchy. The other thing to be very aware of is that we are still talking about the idea that in 2018 and 2019, more and more economists are forecasting rate rises, and that has been on both business confidence and on consumer confidence, one of the major reasons that we're actually seeing it to the downside. So certainly something to watch for the future.
Did you know your membership gives you access to our superannuation advice section? Log on to either InvestSMART or Eureka Report to access the latest information you need to know to manage your SMSF and get access to our live advisor Q&As with our tax and super experts Max Newnham and Bruce Bramall.